We go to PR2-5B. So again, in solving this problem, first we have to look at at the requirements so we could be guided. So we are asked to prepare an annual income statement for iLeather product, including the supporting calculations, and determine the balances in the finished goods and work in process inventories for the iLeather product on December 31, 2016. Now, let's read the problem. Technology Accessories Incorporated is a designer, manufacturer, and distributor of accessories for consumer electronic products. Early in 2016, the company began production of a leather cover for tablet computers called the iLeather. The cover is made of stitched leather with a velvet interior and fits snugly around most tablet computers. In January, $750,000 was spent on developing marketing and advertising materials. For the first 6 months of 2016, the company spent $1.4 million promoting the iLeather. The product was ready for manufacture on January 21, 2016. Technology Accessories Incorporated uses a job order cost system, and to accumulate costs for the iLeather, direct materials unit costs for the iLeather are as follows, so totaling $15.4. The actual production process for the iLeather is fairly straightforward. First, leather is brought to a cutting and stitching machine. The machine cuts the leather and stitches an exterior edge into the product. The machine requires 1 hour per 125 iLeathers. After the iLeather is cut and stitched, it is brought to assembly, where assembly personnel affects the velvet interior and pack the iLeather for shipping. The direct labor cost for this work is $0.50 per unit. The completed packages are then sold to retail outlets through a sales force with a commission of 20%. Total completed production was 500,000 units during the year. Other information is as follows. Sold units are 460,000 at $40 each. Factory overhead cost is applied to jobs at a rate of 1,250 per machine hour. There were an additional 22,000 cut and stitched iLeathers waiting to be assembled on December 31, 2016. Now, our income statement should look like this. So our sales, our cost of goods sold, subtracting the two would give us our gross profit, less our operating expenses, that should give us our net income. So first, we have to know how much is our sales. If you can remember, the total number of iLeather sold was 460,000 multiplied by the wholesale price per unit, which is $40. This should give us a total sales of $18,400,000, as you can see here. And for our cost of goods sold, there are two ways in calculating such. There is a shortcut, which can be seen here. First, we have to compute the per unit cost of completed products, which is composed of our direct materials, direct labor, and factory overhead applied. Now, for our direct materials used, total was $15.40. Direct labor is $0.50 per unit, as you can see here. So, $15.40 per unit and $0.50 per unit for the assembly. For our factory overhead applied, so our machine per hour is $1,250, and in that hour, $125 are produced on average. So with that, we can simply divide these two. So this should give us about $10 per product for our factory overhead applied. So a total cost of $25.90 per unit. Now with that, so 460,000 units sold multiplied by the per unit cost, this should give us a total cost of the sold items amounting to $11,914,000, as you can see here. Now if you want to go for a longer route, we have first to calculate our total direct materials used, which is equal to the $500,000 completed plus the $22,000 waiting for assembly. So 520, as you can see here, 522,000 units multiplied by the cost per unit for direct materials, which is 15.40, will get $8,038,800 for our direct labor. Since the direct labor can only be charged for completed goods, since the direct labor occurs during assembly and packaging, so we can only assign direct labor costs to completed products, which is 500 assembled units multiplied by the direct labor rate per unit. So we'll get a total of $250,000 For our factory overhead, since factory overhead is done during the cutting and stitching of our eye leathers, then we can assign factory overhead applied cost to all products, whether completed or waiting for assembly. With that, so 500,000 completed units plus 32,000 in work in process multiplied with the rate per unit, so we'll get a total of $5,220,000. So total manufacturing cost is 13,508,800. Since we don't have a beginning work in process inventory, our total cost of goods put into process and our total manufacturing cost is equal. For our ending work in process inventory, we simply have to assign costs to our ending work in process inventory depending on their state. So for our direct materials used, direct materials are added in the beginning, so we can assign direct materials used for all the work in process. So 22,000 units times 15.4, that would give us 338,800. No direct labor yet since it's not yet assembled, so 0. And for our factory overhead applied, 22,000 work in process inventory times the rate per unit, so that should give us factory overhead applied pertaining to work in process amounting to $220,000. So if you add those three, you will get a total work in process inventory end of 558,800. Total cost of goods put into process less the ending work in process inventory should give us a total cost of goods manufactured. And since we don't have a beginning finished goods, so our total cost of goods manufactured and our total cost of goods available for sale are equal. Now, for our ending finished goods, remember that completed jobs were 500,000 units and the sold units were 460,000. So that should give us finished goods on hand totaling to 40,000 units. So multiply that by the rate for direct materials, direct labor, and factory overhead. So this should give us a total ending finished goods amounting to 1,036,000. So total cost of goods available for sale less the ending finished goods inventory. This should give us our cost of goods sold, which is actually equal to the amount that we have calculated here using our shortcut. So here. So deduct those two amounts, we'll get our gross profit. For our sales commission, so remember that our sales commission is 20% of our total sales. So total sales is 18,400,000 multiplied by the compensation rate. Our total sales commission is 3,680,000 as seen here. For our marketing, advertising, and promotion expenses, it was indicated above that there were marketing and advertising materials amounting to 750,000 used during the beginning of the year, and our promotion expenses totaling $1.4 million. So our total marketing, advertising, and promotion expenses, which are all period costs, amounts to 2,150,000. So our total operating expenses amounts to 5,830,000. So deduct that from our gross profit. This should give us our net income amounting to $656,000. Now, we are tasked to determine our finished goods and work in process ending balances. So if you can recall, during using our longer procedure for computing cost of goods sold, we have already calculated the amounts for our ending work in process inventory and our ending finished goods inventory by assigning them the costs that have already been consumed for this particular item. So for work in process, we have assigned to it only direct materials and factory overhead and no direct labor. And for our ending finished goods of 40,000 units, we have applied everything. Direct materials used, direct labor, and factory overhead applied. So with this, our ending finished goods totals to $1,036,000 and our ending work in process inventory amounts to 558,800. So with that, we're done with our second problem, PR2-5